Hello, and welcome back to Explain the Charts. Today, September 9th, 2025, we're delving into Amazon, AMZN, stock, a company that continues to dominate headlines with both its massive growth ambitions and the market's fluctuating reactions. Recent news indicates overwhelmingly bullish sentiment from analysts, with all 25 tracked by Visible Alpha giving Amazon a buy rating and an average price target near $252. Some even predicting up to $266. This optimism is fueled by Amazon's strong second-quarter earnings, which surpassed estimates with a nearly 10% revenue increase and an EPS rise to $1.33. Analysts like Deutsche Bank and Bank of America cite a resilient consumer backdrop, market share gains in e-commerce, and accelerating AWS growth in the second half of the year due to strong AI demand. The record sales from the longest-ever four-day Prime Day event are also expected to bolster third-quarter results, signaling consumer strength. However, it's not all sunshine. Amazon stock experienced a significant 10.7% drop in February 2025. This decline was primarily driven by the announcement of an anticipated $100 billion in capital expenditures for 2025, with the vast majority earmarked for AI initiatives within AWS. Investors worried that such substantial investment, an increase from $77.7 billion in 2024, could negatively impact short-term profit margins, as management projected a slight 1% decrease in full-year 2025 operating income. Another point of concern came in late July, when Amazon shares sold off sharply, down approximately 8% despite strong Q2 results. The market pummeled the stock due to perceived meager 18% year-over-year growth in AWS compared to competitors like Microsoft Azure and Google Cloud, raising questions about Amazon's competitive edge in AI cloud computing. Additionally, muted third-quarter profitability guidance, with operating income only projected to grow 3% year-over-year, contributed to investor hesitation. Beyond company-specific news, the broader market context also influences Amazon. The U.S. labor market is showing significant signs of cooling, with a fairly weak August jobs report and more Americans out of work than job openings. This pervasive weakness is widely expected to seal a Federal Reserve rate cut, with hopes even emerging for a jumbo rate cut, which could provide a liquidity boost to the markets. However, Wall Street is also bracing for key inflation data this week, which remains a top event for investors following the weak jobs report, and trade policy continues to present uncertainties with ongoing tariff discussions. Artificial intelligence continues to be a major theme, with Oracle soaring over 20% on AI-boosted cloud revenue predictions, but Goldman Sachs also issued an unspecified warning to AI stock investors. Overall, the narrative for Amazon is a battle between long-term growth potential from AI investments and market leadership versus short-term profit concerns and broader economic uncertainties. Let's now turn to the charts to see how these events have translated into price action. Beginning with the one-day chart, encompassing all available data, we can observe AMZN's trajectory since April 2024. The stock experienced a significant drop from around $187 in late July 2024 down to roughly $161.02 by early August 2024, a clear reversal of its prior uptrend. Following this, there was a strong recovery, pushing the price upwards to peak around $230 to $233 in December 2024, demonstrating robust bullish momentum. However, this momentum faced a major setback with a notable decline in February 2025, falling from a 52-week high of $242.52 to lows around $212. This sharp decline perfectly correlates with the news we just discussed regarding the $100 billion capital expenditure announcement and investor concerns over profit margins. Subsequently, Amazon found strong support around the $190 to $200 range in early March 2025, leading to another impressive rally. Currently, as of the last closed daily candle on September 8, 2025, Amazon closed at $235.84, which aligns with recent Google search reports of the stock trading near $237 to $238 in real time, indicating continued upward pressure. The overall trend since April 2025 has been generally bullish, but punctuated by significant periods of volatility and sharp corrections. Let's narrow our focus to the February 2025 period on the one-day chart to visualize the impact of the CAPEX news. Starting from January 31, 2025, with a close of $237.68, Amazon quickly ascended to its 52-week high of $242.52 on February 4, 2025. However, the subsequent announcement of high capital expenditures for AI caused a sharp reversal, sending the stock tumbling. By February 28, 2025, the price had dropped to $212.28, representing an 11% decline in that month alone, as the news reports highlighted. This period clearly illustrates how investor sentiment towards future profitability, even for long-term growth investments, can lead to immediate short-term bearish reactions. The area around $212 to $215 acted as a temporary support level after this significant sell-off. Now, let's examine the recovery following this downturn and the significant dip in April 2025. After the February sell-off, Amazon attempted to recover, but faced renewed pressure, hitting a 52-week low of $161.38 on April 7, 2025. This level of $161.38 stands out as a strong long-term support, representing the lowest point in the entire dataset. From this crucial low, the stock staged an impressive rebound, fueled by overall market recovery and possibly renewed confidence in its long-term strategy. By the end of April and early May, Amazon climbed back above $190, showing strong buying interest at lower levels. This recovery trajectory suggests that despite short-term jitters, the underlying bullish sentiment and analyst price targets have a foundation, as the market tends to buy the dip in growth stocks like Amazon. This also ties into Investopedia's mention of Amazon trading near $235, having added about 7% year-to-date at a similar point in time, indicating a bounce back from its lows. Shifting to the July-August 2025 period on the daily chart, we can see another sharp reversal. On July 31, 2025, Amazon closed at $234.11, but the subsequent trading day, August 1, 2025, saw a significant pummeling, as some news outlets described it, with the stock closing at $214.75. This nearly 8% drop in one day directly reflects the news about slowing AWS growth and muted Q3 profitability guidance, clearly showing the market's sensitivity to these reports. The price fell further to $211.65 by August 4, before starting a more gradual recovery. This $210 to $215 range thus established itself as a critical support level following this earnings-related sell-off. The ability of the stock to recover from this level, climbing back towards current prices, indicates resilience and a strong underlying demand. It suggests that while the market reacted negatively to the growth concerns, many investors saw it as an overreaction and a buy-the-dip opportunity, as suggested by some financial news. Looking at the overall daily chart again, we can identify key support and resistance levels. The all-time high in our data and a significant resistance is the $242.52 mark achieved on February 4, 2025. Immediate resistance lies around the $236 to $238 area, which the stock has approached and briefly surpassed recently, and is consistent with the current live prices mentioned in Google searches. A break above this level could target the $242.52 high and potentially the analyst targets of $252 to $266. On the support side, the $228 to $230 range has shown some prior stability, acting as an intermediate support. A more substantial support is found around $210 to $215, established during the August 2025 post-earnings dip, with the psychological $200 level and the critical 52-week low of $161.38 providing deeper anchors. Now let's switch to the 1-hour chart to observe more granular short-term trends and volatility around these levels. Over the past few days, Amazon has been showing an upward bias, trading from around $225 on September 3, 2025, towards the $235.84 close on September 8. Hourly candles show consistent green, indicating strong buying pressure as the stock approaches the key $236 resistance zone. The hourly volume has picked up during this ascent, suggesting conviction behind the recent moves. Zooming in further to the 15-minute chart for September 8, 2025, we see the immediate price action. After opening at $234.94, the stock experienced some volatility but generally pushed higher throughout the day, closing near $236.06 in the last recorded 15-minute candle. This reflects the continued attempt to break past the $236 resistance, which it managed to hold above at the end of the trading day. The mixed options sentiment mentioned in the news, with calls leading despite light volume, could be playing out as traders anticipate a move higher. To recap for Amazon, the immediate resistance lies at $236, with the significant 52-week high of $242.52 just above it. On the support side, look for $228 to $230 as an initial level, followed by the more robust $210 to $215 area. In the short term, a clear break and sustained trading above $236, especially with strong volume, could signal a bullish run towards $242.52 and potentially higher, aligning with analyst price targets up to $266. Conversely, a failure to hold $236 could see a retest of the $228 to $230 support. A break below $228 would make a move to the $210 to $215 range more likely, reflecting renewed bearish sentiment over AWS growth or profit margin concerns. Conditions that would reinforce a bullish outlook include positive inflation data and concrete actions by the Federal Reserve towards rate cuts, which would generally boost the market. For bearish reinforcement, keep an eye on any further slowing growth in AWS reported by competitors, or if the upcoming inflation data disappoints, potentially delaying Fed rate cuts. Investors should monitor Amazon's next earnings report, due in late October, for updates on AI capital expenditure efficiency and AWS growth figures. Additionally, watch for any developments in trade policies and tariff adjustments, as these could influence consumer spending and Amazon's operational costs.